Hello, I'm Lee Stone, and this is your UFXBank Forex Week in Review. I will be joined today by analyst Martin Smith, who will provide us with his perspective on the events of the last week. He will also give us his insight on what we might be able to expect in the week to come. This week saw many surprises, including a resurgent euro and stronger oil prices. But a declining dollar and trade deficit concerns in the UK still have some investors anxious about the state of the economic recovery. Joining me now to further discuss these issues is our own Martin Smith. Hello, Martin.
Hello.
Thank you for being here. I'd like to begin by asking you about the way the euro performed this week. What do you believe is the cause of this recent rise?
Right. Well, last week we received both good and bad news regarding the euro. There was concern over Moody's downgrading Spain. As I mentioned last week, this move was not entirely unexpected. And now on a positive note for the euro, the European Central Bank indicated it would be lending less money than expected, which seems to have instilled some investor confidence in the state of the Eurozone recovery. Now this news, coupled with the negative payroll statistics out of the US, seems to have given rise to the euro-dollar pairing. Now confidence in the euro is increasing, as many analysts are speculating that the US Federal Reserve will refrain from raising interest rates well into the next year.
Now, what do you estimate this means then for the near term?
I think we'll see a continued rise in the euro versus the dollar, at least in the short term. Now, the ECB announced this week that interest rates would remain around 1%, and this is helping, of course, to increase risk appetite. We're still awaiting results of the European Bank's stress tests, which are scheduled to be released on July 23rd. The question is whether or not the recent confidence in the European zone's economic recovery will hold up. Now, if the results are positive, we can expect a continued climb for the euro. At this point, it's reached a 2-month high against the dollar after falling in June to a 4-year low. Now, if it pushes above 127, there's a good possibility it will reach 130. And I don't want your viewers to keep in, I do want your viewers to keep in mind, rather, that some analysts are saying that this is nothing more than a short-term bounce. Now, we can see that there is a large gap between the 1-month and 1-year risk reversals for the euro-dollar, and this suggests that there are those willing to pay a premium at this time for the rights to sell the euro in the near future. So, as much as there seems to be a positive momentum for the euro-dollar, I think it's as well to approach it rather with a watchful eye.
Oil also saw an increase this week. What can you tell us about that?
Oil, yes, it fell below $72 a barrel this week amid news of China's manufacturing index decreasing. Now, this last week, however, we saw equity markets rising, consumer confidence increasing in the Eurozone, and marginal gains in global stock markets. Now, as growth forecasts increase, the price of oil usually increases as well. More production basically means more demand for oil. Now, on top of this, it was announced Thursday that US crude oil inventories fell by more than 7 million barrels over the last week, putting pressure on supply. Now, at the moment, the oil market is in what they call contango. This is a price structure where the cost of oil for immediate delivery is cheaper than longer distance delivery, thereby making it cheaper to store than to sell. Now, adding to this, we have the high summer demand and other concerns, like, for example, the Gulf of Mexico, which is causing a lot of trouble at the moment. So in Friday's trading, we saw oil top $76 a barrel. There also seems to be a push in retail sales in the US, which would indicate that as long as supply concerns exist, oil will likely continue to climb.
Now I'd like to turn our attention to a segment we call Ask the Broker. This is where you, the viewer, send in your questions to our analysts, and each week we will answer one of the questions in our weekly review broadcast. Today's question comes from George Goodwin of Newcastle, England. He writes, "Some of my friends who trade in gold often mention that there is a correlation between the New Zealand dollar and gold prices. Can you explain what this correlation is and why does it happen?"
Well, New Zealand's currency tends to follow gold prices mostly because of its proximity to Australia. Now, Australia is the 3rd largest producer of gold in the world. It's generally the case that as the value of gold appreciates, so does the Australian dollar. Being that they are so close to one another, Australia becomes the desired destination for New Zealand's exports. Therefore, the strength of New Zealand's economy is largely linked to the strength of the Australian economy. Now, if you remember, last week we covered the price of gold, its relationship to the US dollar. Now, not always, of course, but often enough, you'll find that when the value of the dollar goes up, the price of gold declines. Therefore, you can take the New Zealand US dollar pair and base your trades on gold data. If the price of gold is increasing, the New Zealand dollar is likely to as well.
Thank you again, Martin. I'd like to thank you, the viewers, as well for joining us this week. Be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook to submit your own question to our weekly broadcasts. Please email your questions to Martin Smith at askthebroker@UFXBank.com. I'm Lee Stone, and this was your UFX Bank Week in Review.